Hey guys, so I had a lot of you ask if I could do a video on stop loss placement on an actual chart for a visual. I did a video just talking about it verbally, how a common mistake that a lot of traders make is that they put really tight stop losses and this ends up with them getting stopped out more often than not. And so in that video, I mentioned as an example, like if you were taking a long, you'd put it below the previous swing low. And if you're taking a short, you put it above the previous swing high. So just to kind of explain what I meant like that, and just a quick disclaimer too, that every single trade is going to be different, right? Like you have to be able to read the market and understand where liquidity is lying. So if you guys feel like you're unable to do that, I would definitely recommend going to watch a couple of videos on liquidity and market structure, because without that, you're really not going to understand where to put your stop loss. There's not like a one rule fits all kind of thing. You have to evaluate the charts on every trade that you're taking in order to know where to place it. But I'll give you guys a quick visual example here. And this is not any specific strategy. I literally just opened the chart to TradingView and seen this. So we're just going to go over this quickly. But let's just say, so there's fair value gap there. We had a sweep of liquidity here at this low. Then we came up and then we had a change of character here. Don't mind, I don't know what is wrong with my iPad. But we had a change of character there, and then we created a higher high. So we have a higher high here and a higher low that respects the fair value gap. So let's just say you wanted to enter into a long position. So let's just say you were targeting these highs and you put your stop loss. I was trying to make my stop loss a little closer to these lows, but like I said, there's something wrong with my iPad and I can't do that. But you guys kind of get the idea. So I'm trying to show that if you entered and put your stop loss below just like this low here, because it's below the fair value gap and that low, you would have been stopped out right here. And that's because you're not giving it enough room. And this would have been a 1 to 3.56 risk to reward. Like I said, every trade is going to be different, but for this specific trade, I would have put my stop loss below that low right there. And if price went back below that area, then my trade idea would be invalidated, because then we'd still be bearish, we'd be making lower lows. And as you can see, if you did that, this trade would have worked out. Now, the thing is, my minimum risk to reward is a 1 to 2, okay? And obviously, this would not have met that. This is a 1 to 1.84. So, does that mean that I put my stop loss up to account for that? No, it doesn't, right? Like, you need to leave your stop loss. You need to place your stop loss first, where you need to put your stop loss. If the risk to reward doesn't match your rules and doesn't meet your criteria, you don't move your stop loss up to account for that. Right? You just don't take the trade. Because in my eyes, it's better to not take a trade and to miss out on a trade than to put a tight stop loss and get stopped out. And as you can see, you would have done. So a trade that could have worked out and could have been a win, could have been a green day, could have actually ended up with you losing in a red day, because you didn't account for, you didn't put your stop loss where it needed to be. Because every trade is going to have this this little bit of push and pull, and you need to account for that. And once you start giving your trades more room to breathe, your win rate is most likely going to go up, because I bet a lot of times you've been stopped out because you weren't placing your trade, your stop loss where it needs to be.